Good morning, good afternoon, good evening, traders. Let's get something going here. Metastock, thank you so much for having me. The great presenters before me and the ones you will see after me, I hope will help you in many ways. What I'm going to do with you is something slightly different. I've got no beautiful presentation to show you. I'm not going to show you a PowerPoint. What I'm going to do is just explain where markets are, where they're going, why they're going there. I'm going to offer you some tips that you can use to make money going forward. So grab a pen and a notepad or a digital one. You might want to write some notes. And then, of course, I'll show you how to access my Omni trading. But this is about where the markets are going, why they're going there, and simplicity. This is a very complicated industry. It's a very complicated business. And if you are going to pull a complicated system into a complicated business, you are complicating things, my friends. You've got to get simple. Now, I started in 1982 as complicated as a guy could get out of college, right? Into computers, complicating it all. It doesn't get good until you get simple. So what I'll do is I'll show you some simple techniques that will help you right from this webinar moving forward that you can implement. You don't have to buy anything from me. You don't have to even know a system. You will love some of these techniques because they're simple to use. So let's get moving. The Omni is Oscar's Market Navigational Indicator, OMNI. I'm not actually going to present the Omni for you right now. I'm going to show you a bunch of great charts and how you can use them simply without even knowing the Omni. And if you want to find out what the Omni is and how to get to it, we'll talk about that later on. So let's get moving. Take this little ride with me, kids. I think you're going to love it. Where are markets going? Well, there are a lot of people out there that have opinions on where markets are going, and here's what I will tell you about opinions. You shouldn't have them because everything that happens, every government report coming out, every report that's already been released, everything that a company is going to report, third quarter releases, whether they won or lost or a CEO was cooking the books, traders' reaction to all of that information, you know what all of that is? Right there in front of your eyes on a chart. Now, if you can read that chart, you've read every bit of information that happens in that market. You do not need the news. You do not need your friends on the telephone. You don't need anything but the chart and a good read to basically know what's coming next. And that's what I'm about to show you. You are looking at 30-year bond chart. The 30-year bonds went all the way down to 107.12, yanking up interest rates to 5.5%, almost 6%. Since that day, we have rallied all the way to 120.75. You know what that means? Interest rates are going down. When bonds go up, see this little teeter-totter or seesaw, if you will, if you're at the playground, 30-year bonds going up, the chart going up means interest rates are dropping. So we've got a situation right now where interest rates are dropping, right? Okay. What else do we have? We've got another wonderful situation. Crude oil is dropping. Crude oil was at 95 just a couple of months ago. It's all the way down to it went down to 68.87. Look at this downtrend. You've got bonds going up, meaning interest rates are dropping. You've got crude going down. You know what that is? It's an instant stimulus to everybody on this planet. I don't care if you own an EV car and have solar on your roof. Energy is affecting you in 1,000 ways, whether you're using it or not, especially crude oil. If crude is dropping, every company on this planet, every individual on this planet that uses anything gets an immediate stimulus right in their pocket when crude drops. Now, you can do things, the government can do things to help put money in your pocket. It takes forever to finally trickle to an individual if it ever gets there. But when you drop the price of crude, it's immediate, instant. Now, you've got interest rates dropping. You've got crude oil dropping. What does that do to the markets? That does this. It makes the market go higher. Deflation propels the stock market. There is zero question where this market is going. The chart tells you where it's going. The analysis tells you where it's going. And if you want to look at the fundamentals, bonds going up, dropping interest rates, crude going down, lowering the price of crude, forces markets higher. It's absolute. Just like if you're in bonds and the bonds going up, interest rates are dropping, whether Jerome Powell says a single word, does not matter. Interest rates will drop if bonds go up without government help. So if interest rates are dropping, crude oil is dropping, you better believe that propels the stock market. That is called deflation. So you had a Dow looking at what everyone thought was a double top, top one, top two, it did work, dropped down. We've gotten above that double top. There's not a next one for a few thousand points, don't worry about it. So we got above that double top in the Dow. Does that mean the S&P, NASDAQ, Russell will go too? Let's go find out. So the Dow made it above its double top, and if you ask me, it's built a pennant flag up there. And it will rally out of that pennant flag and stay inside this channel and keep moving, because we've got fundamentals propelling it and technicals telling us where it's going to go. The technicals are the most important because the fundamentals are already in these charts. So you've got the Dow moving up while you've got crude going down and T-bonds moving up, which means rates are going down. It makes perfect sense. Watch what happens next. So if we got above this double top, right, if I extend this line, you'll see that we're above that double top. Let's go to the next chart. That would mean we got to worry about the E-mini S&P getting above this double top, right? But the Dow is the leader. The S&P is not the leader here. The Dow is the leader. And the Dow already got above its double top. So I am telling you now the S&P will get above its double top because it's a follow-up. But check this out. Look at this 18-bar moving average, or algorithm, if you will. Now, an average is actually an algorithm, just very simple, but it's a Wall Street algorithm. People didn't know they were called algorithms 20 years ago, but an average is a form of an algorithm. The 18-bar simple moving average becomes in vogue right here on 526. The market runs up, bounces off the 18, stops at the 18, so the 18's in vogue. That's that. We know the 18's in vogue. Wall Street is using it. Wonderful. So will we. If you want to time your E-mini S&P, write this down. Just use the 18-bar simple moving average. It works like a charm right now in the S&P. Now, this will morph into a different algo and a different average as the markets move. But this moment, top day, this week, use that 18-bar simple moving average, SMA. That will help you time E-mini S&P. Now, will it get past the double top? Yes, because the Dow did. Let's look at another chart. Now, here's the SPY. We looked at the Dow, the S&P futures, the SPY now, the index, the ETF, if you will. It had a double top, but it had a double top reaction already. Look, it hit and reacted. Now, we're in a big bull market right now, so the reaction should be muted just like it was. S&P, the spider, SPY has already reacted to the double top and has started to work its way back and will go through that double top. Why? Because the Dow did. The S&P is. It's a lock. It will. So don't worry about whether or not it's going to. It's going. This proves it to you. So S&P will go higher, especially if you continue to see crude going down, interest rates dropping, the bonds going up. But analysts are good at what they do as well, and the analysis on these charts has been pointing up for months on end. And I've been doing webinars for Metastock every 2 or 3 months and just pointing out more upside is coming our way. Don't listen to anyone. Listen to the charts. They will tell you what will happen. So we are moving higher. The charts are absolutely showing us that this market will go higher. Nothing goes straight up, but these markets are going higher. Let's look at the next example. The NASDAQ. Look at how the NASDAQ adapted itself to the 22-bar moving average algorithm almost perfectly. It almost never fails at it. And that is what I want you to use right now to time your NASDAQ trades. Go with the 22-bar algorithm or simple moving average. That will help you time your NASDAQ trades. And NASDAQ, if you ask me, is about to break out of this little flag thing here, so it is going higher. But Wall Street knows they bought this average here. They bought it again the next day, they bought it the next day, and they bought it the next day, and they will buy it every time it hits until it stops working. And what I like to do is find out what Wall Street's using and jump right onto it. I don't want to argue with it. I don't want to reinvent the wheel. The wheel's been invented. I just want to throw it on my car and make my car go very fast. So I'm not going to argue with what Wall Street's using, and I'm not going to say, oh, it's just a simple 22-bar. Why would they use that? Doesn't matter to me why. They do. Look at it. Now, it will morph to something different, but for now, every time you get near this average, you get to react. Write that down. That is something that I think you should have in your notes. If that changes, you can come see me at livewithoscar.com, and I'll tell you what algorithm they're attached to now. If it morphs out of this one, I do this every day of my life, sitting in a live trading room. In fact, I'm actually sitting in that live trading room right now. Well, it's me waving to you. There's usually a camera pointed right at me, but I'm using it for the webinar. I'm always here. You guys can just come hang out with me. We'll go over these charts and see what's going where. But these tips are just fantastic. Write them down. Listen, I started at 18 years old, 1982, grew up on the trading floor. I live this, I breathe this, I am this. I am better at this analysis than anyone you'll ever meet. If you just listen to what I'm showing you and follow this, you will really find that simple analysis works quite well. Now, I can say that the analysis I'm showing you is simplified on purpose. My OMNI, the Oscar's Market Navigational Indicator, is certainly more complicated than this when it comes to coming up to the buy and sell levels. The chart doesn't look this pretty, right? There's more work on it. So this is sort of what I'm showing you as my analysis 101 as I'm laying on my cot in kindergarten drinking warm milk and cookies. You know what I mean? I'm showing you that, but it's powerful and it'll help you, I promise. I could get much more complicated, but I don't want to confuse anyone. Simplicity works. 22 bar moving average on NASDAQ. Use it, it'll help. Let's move on. What else do we have? Oh yeah, now look at this. The Dow Jones Transportation Average is joining the race. It's joining the race. So anyway, let me slow down. It's joining the race. It's simple stuff, right? It was in a bearish channel, red, got under the 200 bar moving average, started to create bullish upward momentum. So the channel, I made it green, make it simple. Now it's moving up. Well, look at this bull flag. Anyone can see it. Breaks out of the bull flag. It's above the 200 bar moving average. Bottom of the channel. Simple stuff. Gets above the 200 bar moving average and creates another bull flag. The last bull flag created this move. The next bull flag should do the same. Repetitive patterns. They work constantly. You'll get 8 out of 10 repetitive patterns to repeat. Not all 10. But if you follow repetitive patterns as often as you see them, you'll get 8 out of 10 of a bull flag. You'll catch that right. So transportation average is joining the race. If you look at the channel it was in, obviously it wasn't a bear market. It is no longer a bear market. Why? Interest rates were going up. Crude was going up. Now interest rates are going down. Crude's going down. The market's reacting as it should. Well, let's continue. There's a bunch of more stuff on here I want to show you. So it's also not only the first few charts I showed you, bonds, crude, energy, of course, and interest rates going in the right direction. Not only is it pushing up the stock market, but what it's doing to things like cryptocurrency. Look at Bitcoin. Look at the run it's had. And the target is 85,000 on Bitcoin. 2 years, 8 months, we will get there. Anyone that's followed my analysis, last time I put out a Bitcoin target, it went right to the target when it was supposed to. Our next target is 85,000. I'm loaded up on Bitcoin myself. I don't just make this stuff up. We should get there. Nothing goes straight up. And, you know, let's start looking at a few other things here. I'm going to be quick. I'm going to give you guys time for questions. So I'm not going to spend a lot of time on these charts, but I am going to prove to you where we're going and why. Huge component to the stock market is Amazon. All big boats are floating higher. They're all floating towards their previous highs or the last high they ever made, their highest highs ever. Amazon, huge component to the stock market. It's going up. Why is it going up? Well, for every other reason that you see all the rest of the markets going up. But fund managers have to keep the Magnificent Seven in their portfolios. So if there's a reason to go higher, the big stocks will go higher. If there's a reason to go lower, the big stocks will start to go lower. Well, this is a big stock, and it's going higher, isn't it? It's not going lower. It's going much higher. So no algorithm on here that I found useful. Just, no, I'm sorry, kids, I'm going to have to turn that off. Markets are moving. We're actually making profit right now in Russell trade. Let me get rid of the traders. I know I can't send you a flash. Please take 50% of your profits on Russell and move your stops to break even. If you're listening, please do that. I'll get a flash out to you as soon as I can. I got to do that myself. Hold on. All right, sorry about that. Set stops. On the X of my trading room, if you're listening, please move stops to break even. Didn't mean that to happen, but it's a live trade happening before our eyes. Kids, I got to get them out. All right, we're out. So Amazon, huge component of the stock market, heading towards new highs. It is absolutely going to make new highs. because all the big boats are floating towards their previous highs. And they've got great reason to. Now, don't forget, you've got three things going on. You've got crude oil giving us an instant stimulus in our pockets. You've got the bond market rallying up, knocking interest rates down, and you've got December. You know what December is? December is the fund manager's bonus round month. What do you do in December? In December, you kick out all the stocks that aren't performing, and you buy the crap out of the ones that are, so that everyone's portfolio looks cherry in December, and you make your bonus. That's the bonus round. So you've got crude oil helping, you've got bonds helping, and the stock market, Wall Street wants their bonuses. These kids want their bonuses. This market's going higher. Take my word for it. The charts tell us that. Fundamentals tell us that. We will move higher. Nothing goes straight up, but we're ready to go much higher. Use the 21 bar algo on Apple. It works like a charm. I mean, look at how perfect it is. Look here, 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 here. Tips for you guys, kids. I'm not trying to sell you anything. I'm just showing you what you should be using right now. I am Wall Street. I know what's going on here. This will help you every time you get near that 21 ball moving average in Apple. React. All right, so you had 3 days ago, you had your moment. You'll have to wait again. It will come your way. Use that on Apple 21 ball moving average. Simple technique I wanted to show you. And Apple is heading towards its all-time highs. You know how double top sometimes have little reactions, but above that all-time high, we will go. Why? Don't forget it's bonus round month, kids. It's got to go higher. You'll see. Wall Street, these guys want their bonuses. Fundamentals are set up. The technicals are set up. We will just keep moving higher. What else do we have out there? Let's see. Did we look at Microsoft yet? Oh, yeah. Look at this guy. Now, here's another one that just Wall Street is in love with an average on Microsoft. It's the 28 bar. Started right about here. And it just became perfect. I mean, it's just right on the money. And look where we are. Top day. Right at the 28 bar. Write it down, kids. I promise you these things work. Simple. You don't have to pay anyone for them. You don't have to know anything. Just put them on your charts and use them. I've been testing these things and using them for, I don't know, 43 years. This stuff works really well in conjunction, of course, with knowing your formations. And, of course, if you knew the OMNI, you'd get around the arrow. But this stuff on its own without any other help is very powerful, very simple, and clearly visual for you to see, which is what I like to do. Simple, no trickery. You know, there's no shell game going on here. I'm showing you exactly what the market is doing and why, because the market shows it to us. I'm just repeating back. I'm regurgitating what I've learned from the market. So Microsoft, 28 bar algo, looking fantastic. Could be a bear flag here, but you know, Microsoft's one of the magnificent seven, if you will. It's going up with the rest of the market. So I would just use that average to time buying or selling every time you see it. I hope that helps you. What else is out there? Google. So Google, another. All boats floating towards their previous highs. It's just what seems to happen. When the market starts to go higher, the big guys are going to go, and it's easier to find good trades in those big stocks than it is in the smaller ones, right? Because the smaller stocks are susceptible to almost any type of movement or volume. These bigger stocks, they are going exactly where the chart says they're going. The whole entire street is involved. No trickery, no manipulation. Stay with the bigger stocks. Your analysis will work really well. So Google is going to try to challenge its previous highs, just like Microsoft and everything else that you've seen Apple. They'll get there. They'll get above. No real average works well, or no algo I can find working well on Google at the moment. Just threw it up for an example to show you it is moving higher, and it will want to go test those previous highs. What else do we have on here to show you? This guy. So look at Meta. Meta, don't ask me why, it's a strange average. I've never really seen anybody else use it. It's the best I could find. 68 bar algo seems to work, with the exception of every now and then a spurt through. See that? 1 day through, 1 day through, 3 days through. Almost doesn't get past it except for a 1 day excursion. So that's the one that we're going to use for now on Meta. Now, Meta has been a fantastic chart, a fantastic move on the chart. The company itself is great. You'd expect that to go higher without looking at a chart, right? I mean, Meta is the next step or stage of the metaverse, Web3, which is going to go crazy. So Meta is floating higher like all the rest of the big boats. I don't really have a great average fee to write down, but the 68 bar simple does seem to be working now. What other tips can I offer you before I step off this little presentation of mine? Heating oil. What else is forcing these markets higher? The stimulus coming our way. Look at heating oil. Cheaper energy is a worldwide stimulus. Look at this average, how it is just perfect on heating oil. I mean, just Wall Street knows, you know what I'm saying? They grab onto something, they know. So fantastic average on heating oil. Nobody trades heating oil that I know. I used to trade it every day back in the day when we were in the pits, but no one seems to trade it. I want you to see what's going on here. Not only is it breaking down, which helps everybody, right, especially in the wintertime across this planet, but, you know, simple techniques like you had a flag here, right, just broke down from the bear flag. Boom, as your flag's about this right here, and move this a little higher, right, and your pole you can clearly see, and it breaks down. Simple analysis. I promise you, more of this happens on Wall Street than you might imagine. They don't draw it like I'm doing. They tabulate everything, so it's all in numbers, right? So what they're looking at, basically, is this thing. They're looking at all the numbers. If I can smooth this over. They're looking at all the numbers that take place, right? And you can have a whole bunch of stuff on here. And all of that is being calculated. But it is no different than what you can see with your eyes, which is simpler, needs no calculations, no formulas are necessary, no parameters need to be changed, simplicity. I can literally do analysis on a piece of paper with a pencil and come up with really good trades. I don't need anything, but let's know what the high and low was each day, because the chart tells me everything else. So let's look at what else is helping the stock markets go high. You've seen heating oil. Look at natural gas. Don't know what that black thing is in front of us, kids. Look at natural gas. Natural gas is dropping dramatically. I have no idea what's happening with it. It is dropping dramatically. It's all the way down to the tubes. So deflation helps the stock market go up. Natural gas was 10.02. It's 2 and change now. Could it get any better? It's just amazing. So that is a worldwide stimulus. Absolutely. Heating oil, worldwide stimulus. Crude oil, worldwide stimulus. Bonds going up, worldwide stimulus. It is absolutely going to force the stock market higher. It's what happens. Next chart. Oh, look at gasoline. The gasoline chart, look at how this has come down dramatically. It's in the $2 area now, right? Look at you can see the channel moving lower. More reason why you should know the stock market will go higher. That is what we're set to do. Maybe some of the stock markets in the world will not do that, but the way we're set up now, they almost don't have a choice. They're going to have to go higher. So gasoline moving down, that's going to help us go. That's going to help the stock market go higher. What else do we have? Oh, sorry, it's gasoline. We just saw gasoline. So you've already seen crude. To finish this thought, look at how crude has been dropping, worldwide stimulus. So all the stuff basically that creates inflation has been dropping. We don't have to talk about food on the shelves because that's individual companies that keep that up. The fundamental markets that need to go lower to make inflation go away have absolutely taken place. The inflation that's left now is simply companies that were able to raise their prices and are keeping them elevated because, let's face it, the supply chains are back, right? Supply is back, demand and supply is all back to normal. So there's really no reason why you can't get the stuff on the shelves, which means the inflation isn't supply chain inflation, and it's not commodity inflation, and it's not even anymore because we're lowering. It's not bond inflation or interest rate inflation, and it's certainly not energy inflation. So we're out of that inflationary stage, and the markets are picking up on that. So one of the things that will show you that, will illustrate that absolutely, is this. What makes inflation? Well, commodity price index is one of them, right? Here's the Bloomberg Commodity Price Index. This is a measure of inflation and, or in this case, deflation. This type of action will drive the stocks higher. You've got 97.82 versus 140.55 at the height of inflation when our supply chains were all screwed up. We have dropped from 145 to 97.82. There is no more inflation. That's real. It's just priced in inflation at this point. So the markets are absolutely, positively, unequivocally going to react to this. They will react higher, and it's really easy to come up with trades that you need to get in and out. But that, I don't think I'm going to end up showing you here. I think what will happen next is I've got, and I'll take some questions for you, of course. I've got an Omniac who's come out to my Omni camp, which I didn't even talk to you guys about. It's a 5-day session in my home office. I teach people exactly how to call the markets, the way the Omni does, where we go, blah, blah, blah. So I've had an Omniac come out to my Omni camp. He's also been following my Omni trades for quite some time. And he said, Oscar, you do these webinars. You show people great tips, great stuff. You never even tell them where to find you. You don't tell them anything about you. You don't tell them about your Omni. You give them a bunch of stuff and they run off and that's it. You don't see them again. So I think you need to present your Omni to them, but it's not, my plight is to teach people how well charts work, the power of technical analysis, and what you can do to help yourselves. It's not really in my DNA to sell something to you, right? So I am not going to go near that, but I am going to have Neil Dacey come out, who's been to my Omni camp, has been following me for a while, came to me a month ago and said, Oscar, I've created some sort of a little bit of a webinar for you. And I would like to present this in your stead, if you don't want to present it for yourself, just to show people where to find you and the power of your Omni. So in a little while, I'm going to let him do that. But let me show you one more thing. You want to see the power of technical analysis. You want to see no one can do this. No one in the world is this good. The chart is this good. Check this out. Let's take a little journey on the gold chart. Now, you want to see simplicity. You see this red channel? All right. Now, with the exception of you being blind, you don't need any other skill to know what to do when you're looking at this. And here's why. It hits the bottom, becomes a buy. Hits the bottom, becomes a buy. What's it do when it hits the top? Becomes a sell. What happens here? Buy signal. Right? The street is watching. Buy signal. What happens when it gets here? They sell it. What happens when it gets there? They sell it. Simple, right? It's just a channel. But Wall Street is watching this stuff. What happens when it gets here? The 200 ball moving average and the top of the channel. They sell it. Another attempt. They sell it. What happens at the bottom? Let me explain what happens at the bottom. Right here at the bottom, I come up with a buy signal. Not only the simplicity, of course, it's at the bottom of the channel. I better be looking for a buy unless I'm blind. The Omni went bullish down here. Well, we come up with a buy signal, and literally the next day, the war starts. My God, we have a buy signal gold, the war starts. So what do? I use my analysis. Nothing, and I tell you nothing from, if I could grab a rectangle, I'll just grab something here. Nothing from here exists on my chart. Nothing at all. This whole thing doesn't exist. None of this up here has happened yet. Nothing has happened. We are literally down here when I get an Omni buy signal. So none of this has taken place, and here's what we do next. I give a signal. I come out and do a YouTube video, and I said, traders, we're at 1845 right now, but I'm going to give you a target of 1945. We're going to go. The market runs right to 1945, and I give a secondary target. So I give two targets out, 1945 and 2009. Market runs, hits 1945, takes a little breather, runs up, hits exactly 2009, and breaks. Breaks again. When it breaks to down here, I give out a third target. Target is all the way up here. Target calculated. Market runs up, hits the target exactly, and I come out that very night, the night on Sunday night a week ago that we hit that, I come out with a video and said, gold capitulated, get out, it's over, we're done. Watch the downside now. So not only did I give you from the low exact targets, 1, 2, 3. I also let you know once we hit that target, did a video that very moment when the target was hit, we've capitulated. Look at the capitulation that's taking place. You know who can do that with a chart? Nobody. Nobody's that good. No one can do that. These are perfect levels. Everything happened during a war with all kinds of craziness going on. Who can do that? Nobody. The chart can do it. The chart gave these numbers to me. Chart told me where it was going to go. I told my OMNIacs where it was going to go. I did a video to say where it would go. And then I did a video each night as we got there. And then I did the video when we capitulated. How could I have that sort of information? No one can have inside information that accurate. I don't have any. I know how to read a chart. And I can teach that to you anytime you want to come out and visit with me. Now, again, I'm showing you the simplicity behind reading these charts. It can be much more complicated if you want it to be, but you'll find the more complicated you make this, the more complicated it's going to become. You'll never get good signals out of your charts. So one thing I will say, the gentleman before us mentioned about overbought and oversold markets. There is no such thing as overbought or oversold. That is a trader's mentality. You know when a market's oversold? When it stops going up and starts coming down, that's when it's oversold, or overbought, I should say. Market's overbought never until it stops going up and then starts to come back down. Then you can call it overbought. So there are a lot of people out there that have an indicator. As soon as it hits the indicator, they say it's oversold or it's overbought. That's ridiculous. It is never overbought or oversold till the market turns and tells you. So it's a trader's mentality. They tell the market it's overbought or oversold. I've never found the market overbought or oversold in my whole career. It just makes moves, and I try to jump on its back like it's a thoroughbred horse. I try to get on its back, take a little ride, get back off, and then follow the analysis again. So you can't do analysis like this. You can't have this information beforehand, and you can't develop it in your mind. And there was no fundamental that could have told me in 1945, 2009, and then 2020, 2120. Nothing could have told me that. Just a good chart read. So it is easy and it's possible to be very good at reading these graphs. What you got to do is realize that the graph does tell you everything you need to know. You just got to believe in it. Gold is breaking the 200-bar moving average today, or probably got even lower today. That tells you, by the way, when it got above, it exploded, right? It just got back below. Not only are you back below, but now you're breaking what Wall Street will recognize as major trend lines, because even though they don't draw the line, it's calculated. They see this trend line right here. They know now we're below the trend line. We're breaking trend. We're below the 200-bar moving average. Sellers will continue. Reading these charts is not that difficult. You just have to know what to look for. Is there any questions that I can help traders with before I turn this over to Neil Dacey?
Yeah, we have some questions for you, Oscar. Okay. Let's see. You talked a lot about gold. Alex and B were both asking about silver, other minerals, and agriculture.
So silver is always a dog. We go to, I'm sure I have a silver chart. In fact, let's just do a fresh. Silver is always a dog. It has been my whole life. I'm going to tell you a story about it. So, get this. Once the chart comes up, I'll show it to you. So, this is the chart. That's not the chart. So, That's the all right. So, this is silver. And something was told to me about silver the day I started in this business. Very interesting. Here's what I was told. Silver is a dog. What do you mean, boss? Dominic Orsiello, my mentor on the trading floor, one of the best traders to ever grace the exchange. Thank God I ended up working for him. He says, look, silver's a dog. Every time silver sticks its ugly head up, take out your lawnmower and chop it. What does that mean? He said, you'll see. I've been doing this now. This is my mentor speaking to me. 65. I've been doing this for almost
I will
40
show this.
years. That's when he started on the floor, and the price of silver was around $21. He said gold was $65, platinum was $100, copper was 65 cents, silver was about $18 to $21. 40 years later, gold is $700 an ounce, copper $65 an ounce, platinum's $1,000 an ounce, silver's in the same place. So that's what he said to me when I started 42 years ago, right? Well, I've been telling this to people since I started. Silver is a dog because as long as I've been in this business, 43 years, it does exactly what Dominic Marciello told me it would do. Every time it sticks its ugly head up, take out your lawnmower and chop it off. That's what I'm going to tell you about silver. It's the best advice that was ever given to me. It never goes up. It's always in sympathy with gold. And when gold shows the slightest bit of weakness, silver will fall apart much sooner. So gold goes first, silver follows. And as soon as gold falls, silver goes quicker on the downside. So keep your eyes on it in that vein of thought.
All right. B wants to know why you don't use candles.
So if we turn this into, all right, so right now we're looking at a daily bar, right? So it's got an open, a low, a high, and a close. Simple information. But if we take this and we turn it into a candlestick, now I've got wicks, I've got full bodies, I've got empty bodies, I've got things that are, look at this little guy right here. He's got a little full body with a long wick. Then there's another one with a full body and a little wick. That's too much information. I don't want to know that much information on a daily bar. I want to know what was the opening, what was the close, what was the high and low. I don't need any of the rest of the information. And there's one more thing about candlesticks that seems to drive me insane. And the thing about candlesticks that I have found I don't like, I'll just bring any candlestick works, is that if you see this candle right here, it might mean something. But the next day, this candle makes the one behind it have a new meaning. I don't need to know ever what happened in the past, right? It's gone. I need to know tomorrow's meaning. So if today's bar makes yesterday's bar something different, I'm trading off yesterday's bar's information. Today's bar made yesterday's information incorrect. If you ask me, candlesticks is like chasing your tail around. There is no way to get them right. I don't use them. I was a candlestick guy, guru, if you will. Back in the 80s and 90s, I even wrote programs to show people what each candle was. Before anybody ever did this, we wrote a computer program. I could go upstairs and show it to you in the 80s. What the candle meant, every single candle, formation above it, little words above it, tells you what it meant. And it took me a year to do it. And by the time I was done writing the program for them, I told them I'd never use candles again. And I haven't used them since. Too complicated, too much information, should be much simpler.
All right, let's see. A couple questions about moving averages coming in. Alex wants to know, do you think 20 or 28 is considered a short-term moving average? And Raymond wants to know how you determine the moving average.
So, in fact, yes. Let me get rid of this. That's going to be, it's probably not clear to see. Let me pull up a fresh chart with nothing on it. Anything at all. You know what? I'll just pull up S&P. So we'll do SC3. And that's not ESC3 by any means. So you've got, let's just we'll get rid of any averages that are on here. The 200's fine. So what I'll do normally is, don't know what Wall Street's using, don't have a clue what they're using. It's always different from week to week, month to month. But I like to know what's working on the outsides of the market, right? So any average I can find, and we'll just pull up any average for now and just see what we can do. But any average that I can find that's on a chart, in fact, let's undo that. Let's take an average and we'll make it a different one. If I can find it working on the outsides of the market, I like it. So of course, the street loves the 50-ball moving average, right? And we want to see if that's got anything to do with anything. Now, if you take a look at this, it actually is working kind of well with the market, right? 50. Here it works, here it works, here it works here. It's a little bit fuzzy up here, works well again down here, but now it's out of vogue. Nothing to do with where we are now. So they're using a shorter term. All right, what are they using? Are they using something ridiculous like a 21? Simple, I mean, that obvious? All right, not a 21. And you move around until you find out what it is these cats are latching onto this month. So maybe it's something little like an 18. I tend to not use averages like that unless Wall Street's using them, but if they're using them, I'm using them. So I like bigger averages, 200 bar, I like that. It stays out of the market's way. I like the 100 bar average, stays out of the market's way. But Wall Street likes to get complicated. They'll actually take this down to, sometimes you'll see them literally with like an 11 bar average. I've seen this before. And they'll use that for months on end, even though we don't realize they're using it. So what you want to do is make sure that your average is not getting hit very often. Anything that's not being hit often is something that can be used. So you move your average around till you find one that literally just floats along the top, and you'll find it. You want it to float along the top, right? And if it gets through the top, it starts to turn, and maybe it'll float along the bottom, but never really go through much. You don't want it to go through a lot of stuff. That's the type of average that works for me. It's also the type of average that works on Wall Street. So you can literally just experiment till you find one that's working, and when you have it, lock in until you see it morph away. And in the last presentation I did for traders, I think in fact we had this. Watch this, I can do it right before your eyes. Can you see 2, 3 on this guy, or just 3? Should be 3. All right, so watch this. I did a webinar for you guys 2 months ago, and if I remember right, NASDAQ was using like an 18 bar average. Let's see what this one is. I think it was using an 18 bar average. It wasn't 18 on this one, it might have been 21. It's gonna be a moment, I'll show it to you. All right, so I think it was the 21 bar average. And they were using it, and it was really, really good. And right around here, it just changed a little bit. I want it to be perfect. So I said, okay, what are they using now? And they literally just moved it out a little bit. It's like an 18 now. No, the other way. They moved it out a little bit. It's like a 24 right now. Maybe a 25. And it's a 24, like I thought. So what I want you to do is just experiment until you find what they're using and then latch on. Because they won't know you're using it, but I promise you, you'll know you're using their work. So as you can see how many times the 21 stopped working, the 18 stopped working, it morphed up to a 24, they're using the 24. It will move. A lot of times I'll find it'll actually move further than, it'll go from the 18 to like the 50 or the 70 or the 100. But in this case, it only moved out a little bit, which means the market's tight. They're using the average like crazy, and it's in everyone's systems right now. In fact, you can tell when they pull them out of their systems because they just stop working as well. Is there anything else I can help you with?
Yeah, I think we have time for, we have time for one more. Tammy wants to know if you can look at the FTSE 100.
FTSE 100. Now, I know I have a FTSE chart saved here, so let's just go. Oh, you know what? It's got a strange symbol. What's the FTSE symbol? You remember?
See, I think it's .FTSE if I remember right.
It's not? I'll just try it, see if that comes up. Because I had a nice chart saved that I've been using for a few years. And there it is. Beautiful.
Yeah, okay. I was right. Woo! I'm going to write that down. So don't forget.
You know, this used to be part of our everyday trading, the FTSE. I don't know, about 8 or 10 years ago, they just kind of stopped giving us the quotes. It stopped being part of American trading. I don't know anyone that bothers trading it anymore, at least here in the US. So, all right, so simple analysis. Let's get simple, simple. If we just connect the highs, in fact, I like connecting that high to this high and pulling through there. That's the first high that took place. Then I would literally just do another one and pull it above these highs. And it's a guaranteed lock that Wall Street has these two lines in there. It's a guaranteed lock because they're looking at the highs and the next high. They're extending out tabular form, yes. So it's, you know, it's in numbers, but they're looking at the same thing. Why? You cannot draw this trend line from here to here unless you know this exact mathematical point and this exact mathematical point. What is the difference if we see it visually or we see it in numbers? It is the same thing. Visual is easier. It doesn't take as much thinking. So FTSE right now, it's looking all right. What kind of average that is? This looks like, you can see what kind of average it's in. It's probably the 50 because no one's using it right now. Maybe not. Try the 100. So I don't really see anything that I love about the FTSE except for that it's above this first trend line. And of course, you can see it's in a channel moving higher. All right, let's just do it this way. We'll connect that, keep it parallel. And you can see it's in some kind of a channel here. So it's in a channel moving higher. I like that. I like the fact that it's above this average. That's given it trouble many times. And I like the fact that it's above this first resistance. We'll make it red so you can see this resistance. I like that it's above that resistance, but I don't really like this market at all. I mean, looking at that chart, the problem for me is that this chart goes in the wrong direction, right? Parallel of this, you've got a chart moving down, not up. I like charts that are moving up. This is a upward trend in a downward bigger trend, right? This is an upward movement. This one here, we'll just cut this out of the way. This is an upward movement, but you're really in a down trend. So for me, I don't love this chart. We call it a stock for all I care. I don't really love it. It probably will move in sympathy with the US market, but I wouldn't take a trade off this chart. I would just ignore it fundamentally. Anything else, Jeff?
Let's see. Richard wants to know why the SMA, not the EMA. And Raymond wants to know lots of questions about moving averages. How do you feel about the value of the slope of a moving average when looking at price action? So a couple of moving average questions for you.
So the value of the slope to me means absolutely nothing because it's getting its slope from the value of each daily bar that comes up. So you may be creating a formation, bullish flag, whatever you find. You might be creating a formation while you've got an average sloping. I rarely use an average unless it's away from the market and we get to it. So in other words, averages aren't part of my analysis unless it's at an extreme moment and we get to it. Then it matters to me. I don't go looking for averages and force them to fit. I try to find something that skirts along the outside and then I ignore it until we get to it. And when we get to it, it's always meaningful. So I don't really care what direction the average is going in as long as it's outside of the market, above or below. Smaller averages simply mean that the market is more volatile, it's moving quicker, and the bars are kind of the same size, so the averages get smaller. When you see the market start to gain larger bars, all right, so let's see these bars right here, these bars that can fit in this little circle. Well, when you have bars moving like that, usually an average barely goes anywhere, right? It just kind of stays there. But then once the big movement starts, like we started dropping down, you see how quickly the average starts to take a toll to the downside. So for me, it's like driving a car. The average is just part of the trade. Don't worry which direction it's going in. When you get to extremes, use your average. When you're not at extremes, leave it alone.
All right, cool. That's the questions.
What? I got this weird sign at the bottom telling me to activate something, and I can't make it go.
Yeah, that's...
It's just.
Okay. Yeah. Let's see. Shall we have? I think you said you wanted to have Neil speak for a minute.
Yes, Neil. So once again, what I never really show anybody is how you can find me. I mean, it's free. You can just come hang out with me for absolutely free. So Neil basically wants to let people know, A, what goes on here and how to find me, and I would love to have you present to you.
All right, be patient with me. I am a GoToWebinar newbie, so hopefully I won't mess this up too bad. Thanks, Oscar. Thanks, Jeff. I've come to a couple of these webinars over the past, and after I graduated out of OMNI I asked Oscar, I says, hey, why don't you do some explanation of the OMNI, the way these other presenters share their stuff? And he said, elaborate, put me together a deck. And I said, okay, here it is. And he said, that looks great, present it. So here I am. I'm not employed by Oscar. I'm just an Omniac who went to his camp, and I want to help him share his knowledge with other and experience with other traders. Okay, is it working? Next screen. I'm in the IT business. I've been doing that for about 40 years, and my trading up until now is pretty much limited to shuffling around 401k allocations and things like that. I got drawn to Oscar's daily videos back in 2006 or 2007, where he'd get on and he'd say, this is what I see in the market and this is what's going to happen. And then the next video comes out and says, see how it played out. And I thought, that's just amazing. One of my favorite movies of all time is Trading Places with Eddie Murphy and Dan Aykroyd and Jamie Lee Curtis. And after them watching them clean up in the frozen concentrated orange juice, I wanted to know how they did it. They got into market at the right time. They caught the daily range before they exited. And how did they know which way the market would go? And well, in Hollywood fashion, they cheated. And how did they know when to enter and when to exit? Well, they relied on Lewis's experience as a trader. I needed to find out a way to trade and how to trade it, where to get in, where to get out. And I've learned since then, you no longer need to have a seat on the floor to be able to do that. You can trade from your home office right on your laptop. And this is where Oscar was willing and ready to help me. So in any day, you can see that there's more than what goes on in the open and close. There's the entire high and low. So how do we know? Is it going to go up, down, sideways? What's it going to do? So then I've learned that Oscar has refined this process, and he calls it the Oscar's Market Navigational Indicator, and it'll project direction any instrument for the upcoming session, whether it be a day, a week, a month, a quarter. It recommends entry and exit prices. It uses a combination of market indicators and technical analysis to come up with those entry and exits. It works on any instrument, works on any time frame, but a key to the OMNI process is to put your stops in first in order to manage your risk. On the livewithoscar.com website, if you go out, you see that on the Daily Omni page, there's two blue boxes there, the chat room and the Get the Daily Omni. If you go to the chat room, you're going to see where the Omniacs hang out all day. That's where you can talk to Oscar, see him on his screens and everything. Also on the Daily Omni page, you'll see this is where you can see whatever the current recommendations are, what the Daily Omni is, and that's what's down the left-hand side there under the 1208. And the right-hand side is where the flashes are going to get posted, and that's where the meat really hits the pan. So let's see. If you scroll down on that Omni page, you're going to see where the current chart analysis that accompanies those videos up top. You can also see the trade recommendations for any dates going back 15 some years. If you look at last week, you'll see that we had 3 winners, 1 loser, and 1 push. But today I just want to go through real quick a recent trade from last week, specifically that Russell short that we took on Wednesday, December 6th. So after the markets close at 5 p.m., we analyze the data. We typically trade in the CME index markets, and those close at 5 and then they reopen at 6. So somewhere around 6 o'clock is when Oscar posts the Daily Omni. And you can see here where he says what we're looking at and if there's a new video out. In this particular session, there was no trade that came in when the initial flash came out, but when it does come out, it'll be over in the right-hand side in the real-time flash update. So this first flash update came out at 9:30 in the morning. The overnight was pretty quiet. And the trade was to go short Russell at 1881, all the way up to 1885. And also make sure to get your stops in somewhere above 1899, and that he would keep us informed on that. Notice that these flash updates are stamped Eastern or New York Omni time. In this example, you'll see the chart on the bottom right. It shows Central Time where the CME is located. So following that flash, we put our buy stop in, we went short at the red dot. These screenshots may be a little tough to read, but you don't have to take my word for it. Pull up that historical trade and you can track it yourself. The next flash update came out right after the market opened at 9:36. It was at 1886, and he gave us what the targets were on what we're going to be looking for. You see that right after it came out, the Russell dropped way down to almost to our first profit objective. He also gave us all the profit objectives for that trade for the rest of the day. Over the next hour and a half, the market went against us, but it never threatened our stop. Eventually, it came back down through our entry. So you see that he reminded us where we were filled and what the current price is at the yellow dot. And this was a chance. If you didn't want to be in, this was your good chance to get out and not take a loss. After another hour of grinding down, we were advised to tighten up our risk. So at 1873.86, that other yellow dot, we pulled down our stops to just outside of the break even. 4, 5. Most OMNIACs trade multiple contracts, and approaching profit objective 1 at the blue dot is where we were advised to, just what Oscar said earlier in this call, is to take half your money off the table and then move your stops. Moving stops is in managing risk. That's huge. This final flash update, Oscar had to take off to UNLV. I don't know if everybody followed what happened at UNLV last week, but Oscar was a little busy last Wednesday. But as he was gone, we already had our profit objectives, and it turned out that through the rest of the session, the Russell dropped through all of those profit objectives, and as long as we had our buy orders in place, we cleared out at the total down at 1854. So in a summary, the market, the Russell closed that day on a down 4.9 points, but we on a range of 42 points, but we caught 27 of those 42 points. So if you exited at the first profit objective, that was $650 on a Russell, all the way up to $1,350 on a single contract of the Russell. If you go out to the page, you can also get out and you see that there's the home, about us, all the other stuff on a standard website. Come and hang out in the room. It's free to register. Oscar mentions that before. You just got to give a name, but you do have to register. If you want to get the YouTube's videos, update those. The flash updates come to platinum members, and that does require a fee. And Oscar can tell you all about that if you want to. I'm a platinum member, and I tell you what, it just about every trade you make, it pretty much pays for platinum membership for a year. Sign up for the Omni Trading Academy if you want to learn how to do this. Join a select handful of people who Oscar personally has brought into his home and taught how to do Omni analysis. You'll be able to do these same analyses on any instrument that has a chart to be analyzed: index, futures, forex, stocks. And don't just take my word for it. Check out historical trades, winners and losers, out on livewithoscar.com. Back to you, Oscar or Jeff.
Well, thank you, sir. Can anyone hear me?
Gotcha, Oscar.
Can't hear you. Yes. Thanks, Neil. We appreciate it.
Neil, thank you for that. I appreciate that. Neil put that together himself, decided he wanted to present it. I thank you for doing that. Thank you so much. If anyone does want to find me, Neil told you where you can find me. It is at livewithoscar.com. Really easy to get to. Let's see, if you go to Live with Oscar, it'll look like this. I think you get it.
Yeah, now we can see it.
Really easy. I'm sitting in a live trading room, right? And you can get to Live with Oscar just by going to livewithoscar.com.
I'd like to pronounce it Live with Oscar.
Yeah, it is Live with Oscar. I mean, I do this 24 hours a day. You live with me if you come here. So if you remember, you log in. If not, you hit register. There's nothing to fill out, right? We don't ask for credit cards or anything. You will get an email. It will go to your spam. That's just what happens these days. Check your spam. Click the email back. You get a verification code, and then come join me in my live trading room where we can do what I'm doing right now every day and night for the rest of our lives. And it doesn't cost you anything. You can line up with everybody else in the trading room. I put on a microphone and a camera on my end. You don't have to put one on your end. It's not even allowed. So it's simple, it's easy, free, and I can help you in 1,000 ways if you want me to.